There's a lot of things going on in the economy right now, and you might be wondering, how is it going to affect my portfolio? How's it going to affect my retirement? Well, we have a very special guest on today's episode where we're going to break down the economy. We're going to break down where everything is at and how that would or could affect you for your retirement.
We hope you've been enjoying all the episodes from the Secure Your Retirement podcast. If you'd like to keep learning and receiving these episodes, then hit the subscribe button and turn on notifications by hitting the bell so you receive alerts when each episode comes out. We've helped thousands of listeners get on the path to securing their retirement. Now it's your turn. Let's dive in.
Welcome, everyone, to Secure Your Retirement podcast. Super excited today. Every time we get to have this particular guest on, Merce and I are like super giddy. We wake up extremely happy because we've got Tom Siamatis coming on. So thank you, Tom, for coming on and chatting with us today.
Well, thanks for having me on. I don't know that I deserve the accolades, but it doesn't take much to get you all giddy over there, I guess.
Well, just to remind everybody, if you're new to the show, or if you've been listening in the last year or whatever, we invite Tom to come in as someone who really kind of comes in from the really big picture, from the economic side of things, not looking at a particular stock or a particular individual piece of the market, but really like looking at things from the really big picture. And as we sit here right now, we're recording this the end of March. We try to get them in once a quarter. So as you're listening to this, it's right here going into the second quarter, and it's like man, there's a lot going on right now, Tom. I mean, when we the last one we did was kind of saying what's 2026 going to look like, and man, I don't know that we could have said that it's going to look like this, but right now we've got all kinds of things. There's a war. There's going on. There's a government shutdown that's not complete yet. There is, still, scenarios where people are dealing with cost of goods and how they're dealing with that. And so I think maybe if we could just start this off, because I think it's the biggest topic of the moment from an economic side of things. What I think is interesting when we talk about the war with Iran, it doesn't appear that it's rattled the markets like crazy. I mean, we've not had some deep sell-off yet. So could you kind of give us your thoughts on that, about maybe why the market is as resilient as it is, and then maybe some of the things that we might need to be aware of if this thing lingers on?
Yeah, I think the market's assumption is, listen, markets generally are fairly optimistic, right? They realize that this is going to be an asymmetric conflict, right? And then the moment that Trump said he wasn't going to send troops in, I think for the markets, it was like, well, the Israelis and Americans are going to bomb this thing, and whatever happens, because you also have to understand a lot of what goes on is the reality of war, but then there's also the way it's perceived, right? So if and Trump's very capable of picking up the phone tomorrow and saying, this thing is over, we've negotiated, it's all good, they've made promises. And I think the market sees that, and they don't really consider this thing as a prolonged, protracted engagement. And yet at the same time, it was supposed to be over in 5 days. We're 3 weeks into this thing, 3 weeks plus. There was a pause over the weekend where he said, hey, we're talking to people. They're saying they're not talking to us. We're saying we're talking. Who knows? And then at the end of the day, I think the market looks at that and says, listen, this can be cleaned up and turned around relatively quickly. Like one of the stats I saw was that if you have a policy-driven sell-off, like what we have now, right, which is basically our country does something, policies change, market doesn't like it, versus a bear market type economic sell-off. Typically, markets are back 4 to 6 months after a policy one. It's about 1.5 years for the other one. So the other one seems more serious. I think the underlying stuff was fairly strong to start with, and this thing just sort of popped up sort of as an irritant, right? Now, if oil persists at being over $100 a barrel for like another month, I think the market's going to wake up. But we've had about, I would say, maybe 10% or so from the highs, because we were hitting records not too long ago, right? And so I think the markets aren't I don't think they're taking it. I don't want to use the phrase taking it seriously, I just don't think they think this is a thing that's going to be long. And, in relative terms, uh, 4 or 5 week war is not a big deal to the market. It's
Right.
when we get into the longer, protracted, changes in the way the economy functions, and people are getting sent overseas, and who do you buy? Do you buy defense stocks? It's like the other part that's kind of funny is I keep thinking is we keep like shooting $1 million missiles at $5,000 drone facilities. I mean, how long is that math going to work? So.
Right. So while we're on the topic, can we talk a little bit about I guess the importance of the Strait of Hormuz and kind of how big of a key role that it's playing in, which could lead into economic issues and the price of oil. And there's something I listened to today that said there's some economists out there that think that this one element could jar the global economy for longer than we're expecting it to. And then you have someone else that says it's not a big deal. And then you have someone else that says this could take the price of oil to $200 a barrel. So can you talk a little bit broadly about the strait and kind of the issues there and why it's such a big conversation right now?
Right. So the Straits, for those, that don't have access to a map, it's basically east of Saudi Arabia between Iran, and it's a very narrow opening, right, that comes out. And about 20% of the world's oil flows through there, right? That's manufactured in Bahrain, the UAE, Saudi, whatever. It all has to be shipped through there efficiently. Now, it could be shipped through different places, but it's a lot more expensive. Pipelines out somewhere to the Mediterranean, I don't know, Red Sea, whatever. But at the end of the day, we're not that susceptible to it, right? But the problem is that India, China, and those kind of places are very, very, reluctant to give up on that oil, right? And so when you take approximately 20% of the world's inventory and bottle it up in basically a bathtub, because Iran sits on top of that strait, and it's very easy for them to blow up a ship that's anywhere near there. And then listen, I run a tanker, an oil tanker company. I've got billions of dollars of invested in my ship and oil. I'm not going to sail that thing, right? On the chance that it sinks. So that's that. It's really not the act. It's just the threat of it versus the reality that, like you're watching some kind of like video game where ships are driving by and you're shooting torpedoes at them. That's not how it works. It's really once the fear comes in, people are like, listen, I'm going to get paid for my oil, but I don't want to blow up my tanker. So I'll just sit here and wait. Now, as far as economists, listen, there's always the doomsayers, right? There were the guys after 2008, 2009 that said, the market was going to take 10 years to recover. There's always somebody that's going to take the other side of that. I think the reality of it is this could be a good thing in the medium term, if not short term, for energy prices. But think about it. If Venezuela gets compliant, they produce a lot of oil, right? And they picked up Maduro, they rolled him up, and now maybe they're working with the people of Venezuela, and if they can get that oil on the market, which had not been available, right? And now, if you can get Iran to behave and become a better global citizen somehow, their oil can come on the market too. So in reality, you could have a glut of oil in the next couple of years, and oil prices could severely tank because Iran's going to need the oil money to rebuild. Venezuela needs the oil money to rebuild, right? They're not going to be, hyping $80 a barrel oil. They'll sell that thing for 40, 50, whatever they can get for it just to get the money to build up their countries again. So, there's always two sides to this argument, but I think, right now it's just the fear of ships being blown up in that very narrow bit of water. And that's constricting, that's bottling up like 20% of the world's oil supply. And that's a huge impact.
Yeah. So now, we got that big heavy weight on us and looking at that and trying to figure that out. And then to compound this particular issue, we're still dealing with at least a good partial government shutdown, where you're hearing about the TSA lines, snaking out the buildings in New York. You hear about the fact that ICE agents now are being deployed to a handful, or maybe I think it was 13 or 15 different airports. And there's obviously people who don't like that and are concerned about that. But I mean, where do you see that playing out? Not that particular section, but just the whole shutdown as itself. Like, where do we see this, and how this affects things?
Well, I mean, it does affect people. People are traveling, right? And so here's the thing. When to avoid a prior shutdown, I think they passed something like 5 out of 6 bills, right? And the challenge here is that the one bill that wasn't passed was funding for ICE, or I'm sorry, funding for DHS. But ICE and Border Patrol have already been funded through the big, beautiful bill. So the people that aren't getting paid right now are TSA people, FEMA, I forget another agency, but they have nothing to do with immigration or customs, right? So this is a political football that's being punted around, and unfortunately now you've got, like, I was in the airport last Saturday. I was coming back from Seattle. There was thankfully nobody in line. I had a long talk with one of the TSA guys, and he was just showing up for work, not getting paid. Tomorrow I'm going to be in Charlotte, and we're thankfully here in Kansas City, it's privately run. I don't know that. I didn't realize that some TSA was, because San Francisco and KC have private whatever contractors to do it, so they're getting paid. But you go to these other places, Atlanta, 4 hour delays, LaGuardia, 3.5 hour delays. It's a challenge because it's ticking people off. Like, kids aren't getting home from spring break, or people are missing business flights. So it's annoying, and I don't know how much of that had to do with like the tragedy that we had at LaGuardia last night, where I don't know whether the distractions or staffing shortages, who knows, right? But I mean, it's going to come to a head at this point. This is It's the same reason the shutdown ended last fall, if you guys remember, right? There was the TSA that was screaming that we can't handle this, and we're going to start cutting back flights, and we can't. So that's a drag. The ICE people at the airport, uh, they have no ability or training to which I'm aware of to actually mitigate any of this stuff. I don't know what they're going to do, but that just seems like circus stuff that's going on. But yeah, it's a challenge, right? And I mean, at the end of the day, I think it's going to have a significant impact, if anything, on the mood of the public more than anything else, right? Because people are going to be pissed. People are going to be angry, and they're going to vote in the fall, and they're going to remember something like this. So I don't know what all is going on, but it sniffs of politics on both sides, which I don't like, because you do you, but when it prevents me from me doing me, that's a problem. So that's kind of what it feels like. I don't think it's going to have an meaningful impact on GDP or anything like that, like the first shutdown did in the fall.
Yeah. So let's do one more, uh, I guess, negative thing that's happening right now, and then we could maybe see what your thoughts are on anything positive that you see going on in the world today. But so last year we had the introduction of all the tariff conversation, and then the ups and downs of that, which tariffs can be linked to inflationary pressures, and the Fed kind of battling with interest rates. And we walk into this year thinking things are under control. Interest rates should start going down. And all of a sudden, we're in this pause, this holding pattern on interest rates. And uh, we see inflation kind of coming back up a little bit, whether it's tariff related or just because of energy and the cost of oil right now. Is it that? So the Fed has said we don't know, and actually it could be that it could go up again on us here, interest rates. So what are your thoughts on all of that, and kind of where we're at and where it's headed? Um, just curious.
Yeah, it doesn't feel good at this point, right? Because at the end of the day, all the problems that Trump had with Powell, basically Powell's going to have a pass now, right? Until next month, until his replacement has been named. And given all the stuff that's going on right now, it would be foolhardy to cut rates, right? Because at the end of the day, you don't know what's going to happen. The tariff thing that got thrown out by the Supreme Court, we don't know how that's ultimately going to be resolved, because um, there's lawsuits about people wanting to get paid back, right? But at the same time, the administration cobbled together basically the same tariff package that they had before, but it's not durable, right? It's not something that it's going to be looked at in what, 6 months or something like that. So that's going to come back around to haunt us. So that's a black cloud on the horizon, right? The energy stuff is a drag because despite what all the experts tell you about CPI and all the things they calculate, like energy is huge and it's in everything, right? It's in your transportation, your manufacturing, all of those things factor in. When your energy bills go up, your cost to produce things will go up. So the longer this goes on, I don't see near term inflation really improving, and I actually see it maybe deteriorating a little bit more, maybe scooching up to 4 or 5% if this energy thing continues, to put a squeeze on people. I heard I saw a story that American Airlines was talking about jacking up their rates by 20% because of fuel already, right? So I don't know if you guys remember, but back in the day, do you guys remember there was a jet fuel shortage in, like, I don't know what it was, 2007, 2008, somewhere around that. That was right about the time when they started charging people for bags, right?
Hmm.
Well, they still charge people for bags, and jet fuel had gone, down the toilet, right? So beware of that, because a lot of times when these people find a reason to raise prices, whether it's energy or whatever, they keep them higher. So that's going to add more angst to the whole affordability thing because people's wages aren't keeping up, not to the tune of like 20% or 15% or whatever surcharges these guys put on and whatever things they decide to do. So that's a challenge. As far as rate cuts go, I mean, Powell was out there last week and he was still saying there's a chance for one this year. I don't know how you do that unless the war ends real quick, oil goes from like 100 to like 50, right? And then stuff craters, and the people that were thinking about getting to the point of raising prices sort of like, things aren't that bad, we're okay. Now, again, the tariffs will be another thing. It just seems like it's just like this never-ending nightmare, right? It's just kind of like, a leaky faucet, drip, 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 drip. It just doesn't want to stop. You guys are right. I mean, I was hoping this thing was done, but the Supreme Court threw, Trump a curveball, but he loves his tariffs, right? And so he views that as a viable policy tool to get other nations to comply with what we're wanting to do. I don't see him abandoning that. I see him digging in and I see him fighting for that. So, yeah, we've painted a pretty grim picture, man. So let's
Yeah.
talk about
I
something
was
a
gonna
little
say,
more
yeah, I was gonna
positive.
say, let's don't continue down this path. Let's talk some things that maybe we see that despite the first 15 minutes of this conversation that have been negative, like despite all that, what do you see right now that you like?
Well, I liked earnings were good. Companies are doing really well. The whole AI stuff is here to stay. I think a lot of people just jump like way out over their skis, but I think you're going to start seeing companies embracing it. You're going to start seeing companies, using it more productively. I like that I'm seeing. I think, at the end of the day, the economy seems like you're not seeing a lot of people getting fired. You're not seeing the mass layoffs. You're not seeing the bankruptcies. People's homes are getting foreclosed on. All those things are still fairly solid. Is if we could just stop with all the headline stuff, right? Stop like grabbing dictators or blowing up countries or, waving tariffs around and just let the economy get a breather. Because I think fundamentally we're in decent shape. We're strong. It's just we need about 3 or 4 months of just regulated, like turn the treadmill down to a walking pace. So we're not just flying down the damn thing, right? That's what I think, can be very positive. Because remember, we were sold on that whole thing that, oh, this was going to be the golden age. There wasn't going to be regulation. People are going to get big fat tax refunds. And well, I'm tired of watching things getting blown up and people being led around in orange jumpsuits. I want to be living some of that golden age. So I think, there's a lot of positive there. I mean, rates were coming down before. What's interesting, I don't know if you guys noticed this, but like yields did not come down when the whole oil thing went up. And I think that's one of the quirks where the market sells off, yields generally go down because people run to safety and, there's a demand for bonds. What's interesting is yields went up because that's one of the peculiarities of an energy uh, type sell-off. where people are freaked out that, they sell their stocks and then they sell their bonds too, which is kind of crazy. But so that's one of those things where diversification doesn't work very well. But I think, yeah, like I said, I think the economy is fairly solid still. Companies are having really good earnings, and we're not seeing the telltale signs of anything bad. But it's kind of one of those things. The longer you keep bad things keep happening, at some point in time, the fallout, people just throw in the towel and they mentally check out. And then when they start checking out, then you start seeing bad things happen in the economy.
Right.
So,
So, and I agree. We've got a lot of distractions that are keeping. It's hard to really focus on just the things that make us operate smoothly as a country, because we've got so much else going on. But so to the listeners, Tom, what do you say to them if they're saying, I'm worried about my financial plan, I'm worried about my investment strategy, am I diversified enough, all those different types of things, and in moments of turmoil like we are in now, or we were during the pandemic. So what do you say to that listener to help ease their mind a little bit?
yeah, these are probably the most testing times to be an investor, and I would say these are probably the most important times when you leverage the relationship that they should have with you guys as their advisors. You guys, it's you plan, right? And that's the important thing, right? Supposedly you plan for these type of things. Now, I don't know the specifics of how you guys go about it, but typically you have money you need right now for the next whatever it is, 6 months to a year, intermediate money, home run money that you want to put out. So I would say, at the meantime, if you're functioning fine, you're not getting to that point where you're running out of your near-term money. Your lifestyle isn't really being impacted. I mean, it may be in some respects because you're paying more for gas, or you may be paying a little bit more from an inflationary standpoint, but your lifestyle is what it is. I'd be concerned if that was changing. But as far as just throwing in the towel and saying, why I hate stocks because, the stuff I don't need now and don't probably need for another 10 or 15 years, why sell it? Because, my argument is, do you think the market's going to be down 3 years from now, 5 years from now, 15 years from now? It's not. So the problem is that people think very near term when it comes to this stuff. They don't really, they forget their plan. And that's why it's important that you guys remind them, and that they need to remember, like, the first thing they need to do is don't make a snap decision in this case. Really ask the question. The simple question is a super simple question. Am I still on track? Right. And if you guys are saying no as objective people, because the client's going to come in, they're going to be emotionally motivated, right? They're seeing the news, they're seeing bombs drop, they're seeing, the craziness, and they're consuming that stuff. And there isn't anybody to say, well, hold up, have a different perspective on this. We've always had these crazy events occur, yet look at what the market's done over time, right? Nobody's saying that, yeah, but to them, except for you guys. So I think, to me, the first thing you should do is, first of all, you should never make decisions during a crisis. You should never make decisions when you're stressed out, and you should always get input before you make a decision. I mean, I know those are kind of simple things when you stop and think about it, but you guys, like myself, we're dispassionate when it comes to this stuff. Somebody comes into me, you know, I can be dispassionate about how they look at their situation. It's very personal to them when they see their account drop $100,000, right? But it doesn't mean their plan is flawed. It just means the market isn't working in their favor. But hopefully their plan will keep them out of making a silly mistake. If you're 100% invested in the S&P 500, yeah, I would tell you should probably diversify somewhat, right? But people have annuities. First of all, that's another big one that people always forget. They have an annuity that is very stable, that doesn't change. So when you see the market go down 10%, you say, oh my God, my portfolio is down 10%. No, it's not. If half of your money is in an annuity, guess what? You only lost 5%. And if you don't need that money because it's out 10 years from now, you really haven't lost anything because it's still on paper. So that's what I would tell people. It's like the time when you feel like you need to act is really the time when you need to stop to think, take a deep breath, and be glad you have an advisor who's willing to sit down and talk you through it. And again, if the plan is not working and it's flawed, you guys will be the first to tell them, right? But don't just think that everything's been fine until now, until I watched, that half hour of Fox or CNN, and all of a sudden, oh my God, I gotta run and hide. I gotta go dig a bunker somewhere. And I think people just, we have a, I guess, predisposition as human beings to do something, right? Remember our parents, don't just sit there, Aiden, do something, right? No, parents used to tell us that all the time, right? Well, that's not the case with stocks or your portfolio. You did do something when you planned. But not the time when you're feeling stressed. So, I know that may seem like non-economic advice, but it seems like the most wise choice for people to heed that, because I think if you could calm yourself, you'll find yourself making different decisions.
Yeah,
So,
that's exactly what we share with our clients all the time. So we really appreciate you um, reiterating the message that we carry. So we appreciate it. Well, Tom, we appreciate your insights like we do every single quarter. So we appreciate you coming on and chatting with us today and sharing your thoughts. And we hope that you are able to make it to Charlotte tomorrow. And
well, I'll make it to Charlotte. It's getting back that's going to be the problem. I don't know
yeah,
what's going on there, but the thing is, they'll tell you it's a 3 hour delay, and you show up, and it's like 15 minutes.
yeah,
Right.
yeah,
It's
yeah.
like,
You
because
can't just
nobody,
say I'm gonna stay home.
because everybody will be like, the hell with it. I'm not going to the airport. But
Yeah,
yeah, hey, listen, hopefully next quarter will be a lot better, and hopefully things will be, looking a little bit less, kind of frightful than they are right now. So I'm hopeful that, and these things don't last long. You know, it always seems like when you can't sleep at 2 o'clock in the morning, never
right.
think one is going to come, and it's 4 hours. Either way you slice the sun's going to come up. We'll be fine. I just
Yeah,
think that this is one of those times where you just don't relent and give in to stress, and don't relent and give in to fear. I think it'll be okay.
yeah. Oh, hey, thanks a lot, Tom. We appreciate it. Have a good day.
All right, you guys take care.
If you would like to find more information about Peace of Mind Wealth Management, we invite you to visit our website at pomwealth.net. If you go to the contact page and contact us, we'll send you a free copy of our book, The Peace of Mind Pathway. It lays out our process from beginning to end. Please visit our website.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.